Something extraordinary is happening right now in the gold market. And if you are not paying attention, you might be making the biggest financial mistake of your life. Gold just crossed a level that most experts said would never happen this fast. And the message it is sending is not just about money, it is about the entire global financial system as we know it. Stay with me for the next few minutes because what I am about to share with you could genuinely change the way you think about your money, your savings, and your future. This is not a drill. This is not clickbait. This is real. It is happening right now, and you need to know about it. Before we go any further, if you are new here, welcome. Hit that subscribe button right now and tap the bell so you never miss an update like this one. And if you have been following along, you already know we cover the financial stories that the mainstream media glosses over. So hit that like button because it helps more people see this critical information. Now, let's get into it. Gold is one of the oldest financial instruments on planet Earth. It has outlived empires, survived wars, and watched currencies come and go like seasons. And right now, gold is doing something it has never done before at this speed, at this scale, and in this global environment. It is screaming a warning so loud that even the most skeptical economists are starting to take notice. The question is, are you listening? Let's start with the basics, so everyone is on the same page. Gold prices have been surging at a pace that is genuinely historic. We are not talking about a small bump or a temporary spike. We are talking about a sustained, aggressive climb that has caught institutional investors, hedge fund managers, and central banks all rushing to respond. When gold moves like this, it is not just a number on a screen going up. It is the market's way of saying something is deeply wrong with the current financial order. Gold does not lie. It never has. And right now, it is telling us that the world is in serious trouble. To understand why this matters so much, you have to understand what gold actually represents. Throughout human history, gold has always been the ultimate safe haven. When people lose faith in paper money, when governments start printing cash like it is going out of style, when geopolitical tensions rise to dangerous levels, money flows into gold. It is almost like a reflex, a deeply human instinct that has been built into our financial DNA over thousands of years. And that instinct is firing right now on a global scale. People everywhere, from small retail investors to the largest sovereign wealth funds on the planet, are moving into gold. And when that many people make that same move at the same time, you have to ask yourself, what do they know that you might not? Here is what is really going on beneath the surface. The global debt situation has reached a point that is genuinely terrifying. The United States alone is carrying a national debt that would have seemed like science fiction just 20 years ago. But it is not just America. Countries all over the world have borrowed and spent at levels that are simply not sustainable. And here is the problem with massive debt. At some point, you either have to pay it back or you have to inflate it away. And inflating it away means printing money. And printing money means the value of your cash slowly erodes. This is not a theory. This is exactly what has been happening, and gold is rising in direct response to it. Think about it this way. If you had put your savings in a mattress 10 years ago, that money would buy significantly less today than it did back then. Inflation has been quietly stealing from ordinary people for years. But if you had converted some of that savings into gold 10 years ago, you would be sitting in a very different position right now. Gold does not inflate. Governments cannot print more of it. There is only so much in the ground, and that scarcity is exactly what makes it so powerful as a store of value. And right now, the world is remembering that lesson in a very big way. Let's talk about what is actually driving this surge because there are several major forces all hitting at once, and that is what makes this moment so significant. First, there is inflation. Even though central banks like the Federal Reserve have been raising interest rates to try to cool things down, inflation has proven to be much stickier than anyone wanted to admit. The cost of groceries, housing, energy, and everyday essentials is still significantly higher than it was just a few years ago, And when people feel that their purchasing power is being eroded, they look for protection. Gold is that protection. Second, there is geopolitical instability. The world is more fragmented right now than it has been in decades. Conflicts in Eastern Europe, tensions in the Middle East, and the growing rivalry between major global powers are all creating an environment of deep uncertainty. When the world feels unstable, gold goes up. That is not a coincidence. That is cause and effect playing out exactly the way it always has throughout history. And right now, the level of geopolitical risk on the global stage is extremely elevated, which means the floor under gold prices is being reinforced from multiple directions at once. Third, and this is the part that most people are not talking about enough, central banks around the world are buying gold at record levels. This is massive. Central banks are the institutions that manage entire national economies. They are not emotional investors. They do not buy things on a whim. When central banks start accumulating gold at historic rates, they are making a calculated, strategic decision that gold is more trustworthy than the paper currencies they have been holding. Countries like China, Russia, India, Poland, Turkey, and many others have been loading up on gold in a way that has not been seen in modern financial history. They are quietly, methodically, and aggressively repositioning their reserves. And you have to ask yourself, why would the smartest financial institutions on the planet be doing this if they did not see serious risks on the horizon? The answer points to something that is uncomfortable but important to understand. There is a growing movement among major economies to reduce their dependence on the US dollar. For decades, the dollar has been the world's reserve currency. It is the currency that most global trade is conducted in. But there is a slow, steady shift happening where countries are trying to find alternatives, and gold is at the center of that shift. If the dollar's dominance were to weaken significantly, it would send shockwaves through the global financial system, and the countries that have been stockpiling gold would be in a far stronger position than those that have not. This is a chess game being played on a global scale, and gold is the most powerful piece on the board. Now let's bring this home to what it means for you as an ordinary person trying to protect your financial future. Because here is the thing. You do not have to be a hedge fund manager or a central banker to benefit from understanding what is happening. The same logic that is driving institutional investors into gold applies to individual households. If your savings are entirely in cash or in assets that are tied to the dollar, you may be more exposed to risk than you realize. That does not mean you should panic. That does not mean you should make rash decisions, but it does mean you should be informed and thoughtful about how you are protecting your wealth. There are several ways that everyday people can get exposure to gold. Physical gold in the form of coins or bars is one option. Gold ETFs, which are exchange-traded funds that track the price of gold, are another more accessible option for people who do not want to store physical metal. There are also gold mining stocks, which can offer leveraged exposure to gold prices, though they come with their own risks. And more recently, there are gold-backed digital assets for those who are comfortable operating in that space. Each of these options has its own set of trade-offs and considerations. But the underlying point is the same. Having some portion of your portfolio in gold or gold-related assets is something that a growing number of financial professionals are now recommending, not as a fringe idea, but as a legitimate and increasingly mainstream strategy. Let's also talk about the psychological dimension of what is happening, because this matters more than most financial commentators give it credit for. There is a growing sense of distrust in institutions, distrust in governments, distrust in central banks, distrust in the financial system broadly. And this is not just an American phenomenon. It is happening all over the world. When people lose confidence in the systems that are supposed to protect their economic well-being, they go back to basics. And gold is as basic as it gets. It is tangible, it is universally recognized, it cannot be hacked, it cannot be devalued by a government decision, and it has held its value across thousands of years of human civilization. In a world that feels increasingly uncertain and complex, there is something deeply reassuring about an asset that has stood the test of time in a way that literally nothing else has. And here is something that does not get discussed enough. The younger generation is starting to pay attention to gold in a way that was not true even 5 years ago. For a long time, gold was seen as something your grandparents cared about, something old-fashioned and boring compared to tech stocks or crypto. But that narrative is changing, as younger investors have experienced inflation firsthand, as they have watched their purchasing power erode, as they have seen the volatility of speculative assets. Many of them are coming to appreciate what gold actually offers: stability, longevity, real, tangible value. The demographics of gold ownership are shifting, and that shift is adding a whole new layer of demand to an already tight market. Speaking of tight markets, let's talk about supply for a moment, because this is another piece of the puzzle that is absolutely critical. Gold is not easy to find or extract. Major gold discoveries are becoming increasingly rare. The cost of mining gold has risen dramatically over the past decade due to energy costs, labor costs, and increasingly complex extraction processes. This means that even as demand surges, supply is not able to keep pace in the way it might with other commodities. You cannot just flip a switch and produce more gold. It takes years of exploration, permitting, development, and extraction before a new mine produces meaningful output. This supply constraint is a powerful structural force that supports gold prices over the long term. And when you combine constrained supply with the kind of demand explosion we are currently seeing, the math points in a very clear direction. Now, I want to address something that some of you might be thinking. Is it too late to get in? Have I already missed the run? This is a completely natural question and a reasonable one. And the honest answer is that no serious analyst believes that gold's current move is over. In fact, many of the most respected voices in finance believe we are still in the early to middle stages of a much larger structural bull market for gold. The forces driving this move, debt, inflation, geopolitical risk, de-dollarization, central bank buying, supply constraints, these are not temporary or short-term forces. These are deep structural dynamics that take years, even decades, to fully play out. So while no one can predict exactly where gold goes on any given day or week, the longer-term picture that many analysts are painting is one that continues upward. That said, nothing in finance is guaranteed, and it is always important to approach any investment decision with a clear head and a long-term perspective. Diversification is your friend. Panic buying at peaks is not a strategy. Thoughtful, informed positioning based on your own financial situation, time horizon, and risk tolerance is the right approach. But what is not debatable is that understanding what gold is telling us about the broader global financial environment is something that every financially literate person needs to do right now. Let's zoom out one more time and look at the big picture, because I think it is important to really sit with the gravity of this moment. We are living through a period of extraordinary financial, geopolitical, and technological transformation. The rules that govern the global economy for the past 80 years are being rewritten. The institutions that billions of people have trusted with their economic security are under unprecedented pressure. The currencies that people have saved in their whole lives are being tested in ways they never have been before. And in the middle of all of this, gold is rising, not because of speculation, not because of hype, but because of cold, hard, structural reality. When the world is changing this fast and this fundamentally, the things that have always held value tend to reassert themselves. And gold is doing exactly that. Here's the bottom line. Gold is not just an investment right now. It is a signal. It is a warning. It is a flashing red light on the dashboard of the global economy, telling anyone who is paying attention that serious structural problems need to be addressed. Whether those problems get resolved smoothly or whether they lead to significant disruption, we cannot know for certain. But what we do know is that ignoring the warning is not a strategy. Being informed is a strategy. Being prepared is a strategy. And taking the time to understand what is happening and why is the most important thing you can do for your financial future right now. Think about the people in history who paid attention when gold sent these kinds of signals. They were not the richest or the most connected. They were simply the most aware. They understood that when the oldest and most reliable financial barometer in human history starts flashing red, it is time to listen. And that is exactly what gold is doing today. It is time to listen. So what should you do right now? Start by educating yourself. Understand your current financial exposure. Have an honest conversation about whether your savings are adequately protected against the scenarios that gold seems to be pricing in. Talk to a financial advisor if you have access to one. And most importantly, stay informed because the situation is evolving rapidly and the people who are going to come out of this period strongest are the ones who understood what was happening while it was happening, not after the fact. We are going to continue covering this story as it develops because this is not a one-day event. This is a multi-year unfolding story that will affect every single person on this planet in some way. The financial decisions being made right now by governments, by central banks, by institutional investors, and by ordinary households are going to shape the economic landscape for the next generation. And you deserve to be on the right side of that story. Before I let you go, I want to ask you something. What do you think about gold right now? Are you already holding some? Are you considering getting in, or are you skeptical? Drop your thoughts in the comments below because I read every single one, and the conversation in this community is genuinely one of the best places to get real perspectives from real people who are navigating these same questions. Your comment might also help someone else who is trying to figure out what to do, so please take 30 seconds and share what is on your mind. And if this video gave you something to think about, please share it. Send it to a friend, a family member, someone you care about who needs to hear this. Because the warning that gold is sending right now is not for a select few. It is for everyone. And the more people who understand what is happening, the better positioned we all are to face it together. Hit that share button and help us get this message out. And if you are not subscribed yet, now is the time. Because there is a lot more coming, and you do not want to miss it. Stay aware, stay informed, and we will see you in the next one.